Yeah, if we look across Australia, really, it's on a state-by-state basis at the moment. Victoria is very, very weak. We'd almost say it's as weak as New Zealand, and we've been over to New Zealand quite a lot, and it's very, very tough over there, and it feels like Victoria's certainly heading that way. I think New South Wales seems to be sort of tracking along okay, not great, I'd say fairly steady. And then Queensland and Western Australia in particular are growing really well, obviously led by mining and increased expenditure over there. So, look, it's very mixed out there, and certainly the companies we speak to, across the ASX are really pointing to a challenged outlook, and that sort of gives us confidence that we will see a rate cut at some point next year.
Yeah, is the market really hoping for a rate cut as early as possible to, give a bit more confidence back to the investment sector?
Well, that's right. I mean, the private sector is technically in a recession at the moment. It's only been propped up by government spending. So it is very tough out there. We still think at Wilson Asset Management that the Reserve Bank will cut rates in February or March. We think it'll be earlier than perhaps economists are saying, and that's largely just purely because we're seeing things and the outlook statements from a number of companies are really pointing to things coming off. So we think it'll be like we saw in New Zealand, where the central bank over there was pointing to actually interest rate hikes, and about 2 or 3 months walk back from that and actually cut rates. So we think we'll see the same thing in Australia as early into the new year.
Yeah, you're obviously speaking with a lot of businesses around Australia at all the time. We obviously have just seen Donald Trump win the recent presidential election, and he'll be inaugurated early next year. What are businesses thinking about a new Trump presidency and things like tariffs on the global supply of goods into America?
Yeah, I think firstly we've seen markets rally strongly with Trump being elected, and I think we've got precedents from back in 2016. It was very good for corporates generally, and good for the economy. So I think that certainty around Trump being elected is one of the big reasons why the markets have rallied from that point. Look, it is an uncertain global environment. I think that, again, there was precedence back from what he did last time around. So I think, broadly speaking, the companies we speak to have been preparing for that and preparing for change. And a lot of those companies that do have manufacturing operations have the scale to sort of adjust. And so, we've been speaking to our companies a lot over the last few months, what a Trump presidency will mean. And I think most of them have come into this fully prepared.
All right, and what are some of the big sectors that you're liking at the moment with where the economy's at?
Yeah, so across the ASX, and we focus at Wilson Asset Management on the funds we manage here in small and mid-cap companies. There's some very expensive sectors, such as the technology sector, and there's also some very cheap sectors. And generally in the cheap sectors, these are in sectors that are exposed to the economy in some way and are struggling at the moment given a tough consumer spending and sentiment. So this is in sectors such as automotive, retail, building materials, and in property trusts. So look, we're seeing a lot of opportunities across the market. If we focus on that cheap part of the sector, we like companies such as AP Eagers, which is the largest car dealer in Australia in the automotive space. We like retailers such as Premier Investments and Myer and Lovisa, which has had a pullback recently. We think that's looking attractive at the moment. And in the growth space, and in particular that technology sector, which is going from strength to strength. The key there, and some of our successful holdings over the past, call it 1 to 2 years, has been companies that were smaller companies that have moved into a positive free cash flow and profitability and have strong revenue growth. So there's companies that we're seeing that are at that point right now, companies such as Gentrack, Qoria and Dropsuite, which we quite like too. So look, there's range of stocks, but it's probably, in my time, in my career, it's probably one of the best markets at the moment for stock picking in the small and mid-cap space.
Yeah, you mentioned Premier Investments and Myer. Obviously, those two companies have become more and more intertwined over the past 12 months. What's the outlook for retail in those two businesses? Because we thought all the tax cuts coming through from the start of this new financial year would really give the retail sector a boost. And we've started to see a little bit of extra retail spending in the numbers, ABS numbers out this week. But it still feels like that sector is feeling a little bit gloomy right now.
It is a gloomy sector, and sometimes we can get caught up in the market, how that can impact the listed companies. I think it's always worthwhile to take a step back and remind yourself that the listed companies are generally the largest players and the best players in their categories. And we've certainly seen that over the last 2 or 3 years. It's been a terrible, really tough consumer environment given the higher interest rates and the cost of living crisis. But a lot of these companies have gone from strength to strength as they've taken market share. So feedback we've been having has been that's been a very strong Black Friday period. So the questions will be, can that carry on to Christmas? We think it will. And companies such as Premier Investments and Myer will benefit from that. Now, specifically focusing on those two companies, with Myer, a change of management there with Olivia Wirth, who's ex-Qantas frequent flyers taking over, we think will turbocharge the top line of the business. And at the same time, you've got significant cost synergies coming from the acquisition of the apparel brands from Premier. So we see quite a strong re-rating in the valuation in Myer over time as the business improves its profitability. And we actually think it's got a great chance to take market share from its rival David Jones at the moment, which is clearly struggling. And then on the Premier side, you've got high growth businesses in Smiggle and Peter Alexander, and their shareholding in Breville, which again is a high growing business. So we think now with the business separated that Premier effectively can get a very strong valuation or a high valuation given that it's focused on these high growth businesses. So we're bullish on both companies. We own both of them across our portfolios.
And just quickly, I know you've been in Perth recently meeting with mining companies. I mean, how important are those small to mid-cap stocks that really fit into the solar panel and the battery materials production supply chain for sort of EVs and things like that?
Yeah, it's an interesting space, we'll call it the Western Australian or the mining services sector at the moment. And normally the sector is really fueled by high iron ore prices with BHP, Rio and Fortescue and their spending. And I think, obviously with iron ore prices falling, I would have thought, 12 months ago the sector would be struggling. In fact, it's not. It's actually doing really, really well. And that's largely because the iron ore players have to keep spending to keep replenishing their mines. And that's certainly flowing through. But as you said, there's this other wave of capital expenditure that's coming, which is the electrification of the electricity grid. And also just all the wiring that needs to happen with all these solar and wind projects that are happening across Australia as we approach those 2025 renewable targets. So there's a lot of work that's going on at the moment, and this is benefiting a number of companies across Australia in that services space, and companies such as ServiceStream, Genus Plus, Southern Cross Electrical are key holdings for us across the portfolios.
Oscar Oberg from Wilson Asset Management. Thanks for coming on the show.